Hey guys, Sean here. Let's say you have a family of 4 to feed and you work hard in your job to save up $1,000 for groceries. But when it comes time to buy food, you now need $1,700, an extra $700. What are you gonna do? Do you have the additional savings or are your children going to starve? Now, this is the exact tragic situation families in Turkey are facing, with the country's inflation rate hitting 70%. Now that's a 20-year high and makes the current 8.5% inflation in the States look like child's play. This is what happens when low interest rates and money printing gets out of control. Now, Turkey is reaching the point of hyperinflation, and this is a big reminder to us that money printing rarely works, and trying to control the free market too much can backfire badly. And in this video, we will discuss Turkey's currency crisis and what we must do to prepare in case we get into one. We are already seeing high inflation, and it's a very slippery slope towards an inflation hell like what Turkey is experiencing today. I'm not sure about you, but food prices here are going up by 10 to 20% easily, and every time I head to a restaurant, my wallet screams at me. So what do you do when you face runaway inflation? Now, conventional wisdom is to bite the bullet and raise interest rates. It's painful, but it has been proven time and time again to fight inflation. Paul Volcker did it back in the 1980s when inflation in the US reached 14%. He raised interest rates to 20% and caused the markets to crash by around 20% as well. Now, this caused a short-term bear market, but the US economy recovered and began a long-term bull market all the way to 2000. However, Turkey's president Erdogan is doing economics in reverse, which is very mind-boggling. Instead of raising rates, he's lowering them to fuel investment and increase economic growth by keeping borrowing costs low. But when you lower rates and increase money supply, you have more money chasing fewer goods, and before you know it, you are in a currency crisis. Just between 2014 and 2020, the money supply in Turkey increased by 3.5 times. Now, lowering rates has caused Turkey's currency to collapse to the point of a 70% inflation rate. In less than 10 years, the Lira has fallen by almost 90% to the dollar, and that is truly very frightening. And that means importing food and energy is going to be much more expensive as well. And if foreign investors see the Lira fall like a stone, there isn't much point to invest in Turkey, right? After all, it doesn't matter if you make money in the country. Even if inflation doesn't finish you off, the currency exchange is almost a joke at this point. And the Lira is only useful in Turkey, and everything is becoming so expensive. And this is why hyperinflation is so dangerous. It unleashes a deadly spiral that can easily get out of control. Because you find your dollars getting weaker, you rush to buy tangible stuff. It doesn't matter if it's food, supplies, or precious metals. You just want to get your hands on something real, and this causes goods to be pushed up. The price gets bidded up. And people see this price increase, herd mentality kicks in, and they start hoarding stuff too. And on the supply side, it is just as bad. Because people don't have enough money to buy the essentials, they demand higher wages, and companies are forced to price their products even higher, and prices start to fly up. And this is how we can see inflation rates of hundreds of percent every single month. This was exactly what happened to Weimar Germany back in 1923. They faced over 300% inflation every month. So prices were doubling every 3 or 4 weeks. And at the end of the day, this just penalizes savers, and it's no wonder the local Turkish people are flocking to gold, and the government themselves are trying to get their citizens gold to strengthen the Lira. And the big issue with lowering rates and money printing is that it really doesn't solve the underlying problem a country faces. Now, on paper it checks out. People can borrow more and they can use their steamy checks to buy more stuff. But it creates a moral hazard of out-of-control spending that can cause runaway inflation and asset bubbles building. However, the root problem isn't really solved. Let's take Japan for example. The Bank of Japan has been lowering interest rates and is committed to buy an unlimited amount of bonds, also known as money printing, and they are seeing inflation rise like they wanted, but also their currency, the yen, has depreciated to a 20-year low. Now, considering Japan imports the majority of their food and almost 100% of their energy, which is priced in dollars, the local people there are facing a currency crisis of sorts where food and fuel are getting more expensive. However, the root problem with Japan is an aging population, low birth rates, and a stressful work culture. You can't really solve this by only printing money. You can't buy productivity and economic growth that way. you will just make inflation worse. And in America, the root causes are more around overconsumption, a lot of liabilities, including social security, and racking up huge debt. Now, the same thing, just printing money isn't a magic solution. And when inflation is here, printing money is maybe the worst course of action to take. Instead, a country should go to austerity, like how Iceland got itself back on track after the 2008 crisis, right? They suffered 12% inflation, but they took the hit, they raised taxes, hiked interest rates to 18%, and cut down on spending. And today they are stronger than ever. But how likely are countries today able to do the same, right? Everyone loves free money from the government, myself included. And there's a reason why I'm so upfront with the camera today, right? I'm very, very close to the camera because I really want to get this message out. Inflation is something that really hits us common people the most, right? When we work for our money, we are trading our time for it. And this is why we get so upset or angry when we lose money, fall for a scam, or we invest wrongly, right? There's only so much finite time we have on this earth, and by extension, a finite amount of money we can make in our lives. And that's why investing is so important and why inflation is truly an invisible tax on our wealth. Ever since the world left the gold standard back in 1971, inflation has been more or less always positive, and this means on a long enough time scale, your money will lose purchasing power. And we can see that the dollar has lost almost 97% of its purchasing power since 1913, and it's getting worse with each passing year. Now, there's a big reason why there are protests and demonstrations in Turkey, and it's all to do with the weakening Lira, right? People are getting really angry because of inflation, and not having food is said to be one of the main causes of the Arab Spring uprising. Right now, the Fed is taking corrective action and is raising interest rates and selling off its balance sheet. However, this is causing markets to crash. The S&P is down, gold and silver is down, Bitcoin is down, everything is in the red, right? But it's a bitter pill that we all need to swallow. However, the big worry is that what if the Fed decides to do a U-turn and start printing money once the economy crashes, right? Now, back in 2008, we saw the first helicopter money drop, and in 2020, 6 trillion was printed into existence, and that is why we are seeing 8.5% inflation today. Now, the big reason why the US hasn't seen Turkey level inflations is because the dollar is the world's reserve currency. A lot of dollars are being exported away and circulating across the world. So in a sense, inflation is actually being exported out of the country. Even if the money supply is increased, there's still demand for dollars because major commodities are priced in US dollars and a lot of trade is still done in dollars. However, de-dollarization is happening, right? Countries are beginning to trade with themselves and diversifying out of the dollar into currencies like the Chinese yuan and buying other assets like gold. And if this accelerates, the dollars could find themselves heading back to the States, and this will cause inflation back home to soar. And this is one scenario that we need to hedge ourselves against. Because right now, the US government is still spending a lot of money, right? Don't forget that the Russia-Ukraine war is still going on, and Biden is asking Congress for additional $33 billion to help aid Ukraine. Plus, all the sanctions being done by the US on Russia aren't exactly making the world feel safe with their foreign reserves as well. I think right now the world is trapped in a weird time loop cycle of easing, tightening, and then easing again. And at least in the United States, every time a crash happens, more and more money is needed to prop the economy back up. So what do we do? I ask myself that question on a daily basis. It's that bad? I'm getting real obsessive. And I figure we need to inflation-proof ourselves, and we gotta think like the rich. They are masters of protecting their wealth, and it's all about accumulating tangible assets that can't be printed from thin air. We are talking about gold, silver, real estate, and farmland. Tangible assets that have been proven time and time again to hold value and retain purchasing power every time money is being mismanaged. Now, gold is great because it has protected wealth for thousands of years, for generations, has the perfect characteristics of money, and is highly correlated with negative interest rates. As inflation picks up and rates are low, real interest rates become negative, they dive, and the price of gold rises. Now, real estate, provided you do your homework, right? I have to say again, provided you do your homework, is an even better inflationary hedge, right? Because it can bring you income. You can jack up your rent and do the evil landlord thing and benefit from it. Remember that inflation doesn't really destroy wealth, it just transfers wealth from people who hold cash to people who hold real, tangible assets. Now, inflation-proof assets that have demand. But you can also be like Bill Gates and start buying up farmland and renting it out to farmers, right? Farmland returns an impressive 11% a year since 1990 and has a low correlation to the stock market, which is great. So stocks could enter a bear market, but your farmland could still increase in value. After all, tell me, when was the last time food prices really went down a lot? And farmers that grow food there can easily sell off their produce for more money as inflation rages on, and they'll benefit from the extra rental income as well. Now, normally, I would say the S&P 500 is a great inflation hedge, but it's very dependent on the country's economy, right? I believe the US will grow strong for the next few decades, but we need to keep an eye on things. Just take a look at Japan's stock market. They had 3 lost decades, and if you invested in it for the long term, there will be literally zero growth. Sure, Turkey's 70% inflation seems far away and it's rather impossible to happen to us, right? But just remember that we were at below 2% CPI inflation before 2020, and now we're at 8.5%. Right now, we are seeing the stock market deflate and some things are getting cheaper, and a lot of us are afraid to buy assets. It could be stocks or precious metals, but we need to prepare for eventual return to lower interest rates or money printing once again. It's really not a matter of if, but when. And when that happens, considering the inflation rate today is already so horribly high, it could cause inflation to rage on even more. Now, the Fed could U-turn at any point and reinflate the economy again. So even though the market's going down, I'm still buying assets when there are big dips, because although I'm afraid of deflation, I am scared of inflation even more. Let me know what you think. Are you prepared if inflation reaches double digits? Are you buying gold, stocks, or real estate even though the market is going down? Let me know in the comments below, and if you enjoyed today's video, be sure to smash the like button and subscribe for more gold, silver, and finance videos. Thank you all for watching, and I'll see you soon.